Yo, what's up, everybody? That was a hard transition. It's your boy back with another episode of bullish's top stocks to watch this week. And why I appreciate you guys tuning in for the few, 4 or 5 people viewing it. I appreciate it. It helps me kind of think about my week and plan it out, what I'm going to do, what I'm not going to do. So hopefully helps somebody. If you have any questions, hey, just let me know. Love helping people. But anyways, before we jump into a couple things, these are only my opinions. Do your own due diligence. Everything is IMO. All right. Give us a sub here. Help me feel good about myself. Give me a sub on YouTube. I would appreciate that. Or follow us, real_bullish, wherever you get your social media poison. Let's engage. Let's trade some ideas. Let's talk some shit. We might not agree, but hey, that's actually, I prefer not agreeing with people. Just getting other people's opinions and shit. All right. Anyways, jumping into it, unemployment results came back with some news real quick. Unemployment results came out last week and it was worse than expected, signaling a continued strain on the economy. And unfortunately, talks have stalled for even a small stimulus package. But Dems are bringing a $908 billion bill to the Senate. I think on Monday I saw it just came through. Brexit talks have kind of breaking down. I think they had a date of like Sunday to have it complete. That hasn't happened yet. So that's all affecting the markets here and there over the past week and into this week. And also, oh man, the saddest news I heard, Debo died, from Friday, Debo, my chain fool, like, dang, oh man, 2020 is taking him out left and right. But in brighter news, Trump will find no help from the Senate in his journey to throw out the election results. It looks like he is close to exhausted all of his options, all of his lawful options, that is. So we'll see more to come for that. Once like this whole thing is over with like the election results and stuff like that, I'd expect markets to kind of react positively. They've already seemed to be, favoring a Biden presidency. But I think once this is all over, I think you will see a nice little bump there. So kind of just keep that in consideration. So also, the FDA cleared Pfizer vaccine, and on Friday, I think it was late Friday, and millions of doses will be shipped right away. As of Friday, they cleared it, but that's basically they cleared it in a time of pandemic. They haven't necessarily approved it yet, but this is just trying to get it out there. So that's some great news. But we're also a long way from having COVID under control. So hey, little steps along the way hopefully get us to that bigger goal. So we'll see how all that plays out in the coming weeks. Like I said, hey, there's some good, there's a mix of good, there's a mix of bad, mostly bad, but still, what did the markets do, right? Over this last week, hopefully you can see my screen. If not, I'm kind of fucked. But hey, if you look at the top left, Qs, top right, SPY, the DIA, looking at Bitcoin here and there. But basically, hey, the markets were down, slightly down over this last week, which we needed. If you see, with the Qs, hey, I think the Qs is the one I'm worried about the most, just because there was this level of resistance here that turned it into hopefully support. It kind of broke this level of support, and basically support and resistance areas. We can go over that later time. But hey, this line, I would hope it was to stay under this. Like we see here, like on bottom left for the Dow Jones, hey, it broke over this area of resistance, higher nose resistance. It was respecting this line. It couldn't go over. It finally did go over, and then it's using it as support. This line here, it tried to go over under here, and it found support, right? Support. And then it bounced off of there. Same with kind of like, if you look at the SPY, not so much for Bitcoin. I'm not playing Bitcoin as much just because it stayed in that area for too long. It looks like it's gonna, kind of flatten there to even go down. It did touch the 2,000 area. So all those people that were saying, hey, it's gonna hit 2,000, or 20,000, it fucking did. What was it gonna do after that? Some people were saying, hey, it was just the beginning. Was it just the beginning? I don't know. Still more to see, but still, hey, Bitcoin did what we thought it was gonna do. It hit 20K a few times over that week. So hey, what's it gonna do now? I don't fucking know. But it was holding at 19,000. It broke that and it's going down. We'll see what happens with that. I'm not playing that anymore, but it was fun playing it like that week before Thanksgiving to Thanksgiving week. I think that was a lot of fun for me. But anyways, yeah, the only one I'm kind of worried about is the Qs, because we had a Qs sell off, but also it broke that level of support that was resistance, and now we'll see kind of what it plays with there. But anyways, going on to the stocks that I'm watching for the week, and why not too many of them. 2 of the 3 are recycled, unfortunately. But if you know me, I love some Tesla. Why have I been watching Tesla? Well, just because I love Tesla. I love playing it. It's something that you can swing trade, day trade, because it's so volatile. You have a lot of volatility, and volatility is shmoney But the reason why I'm watching it up in like for the past few weeks, specifically as we talked about for the last couple weeks, hey, they're going to get included into the S&P on December 21st. December 21st is not this coming up Monday, but the following one. What does that mean? Well, at the S&P inclusion, it gives Tesla more credibility, more exposure to indexes and ETFs that have to trade for the S&P. So there's expected to be a lot of trading volume coming in starting this week. Expected. We'll see how that goes down. Basically, for the week, it's been is up, maybe 0.5% up slightly for the week. But that also saying up slightly for the week hides the fact that it was fucking volatile as shit over the week. So yeah, we have on Tuesday, hey, trading highs at 669. Bam! Oh, look at all this volatility right here. Oh, that's sexy. You buy this dip, you ride it back up to when you feel some resistance there. You're shmoney with that. But hey, it was over the haul, it's holding. What I love about it is, even though there's a lot of volatility, and when you look at the numbers, it's only up slightly for the week. There was that shift there. 600 used to be the area, as we talked about. Looking at the next one, it used to be the area of resistance. Why do I say resistance? Hey, it hit this line, and I deleted all my lines just so I can show this. Hey, basically, when I say resistance, look at this line. It's not rocket science. Hey, it's hitting something like this. It's respecting it again. It tries to come back and do it again. It can't break it. It's the area of resistance. And finally, it breaks over that area of resistance. And now it's trying to go under it. Now it's support, right? That price is support. And that's what we see with this 600. And why I like it at 600 right now is because 600 was, before it was 500, was an area of resistance. Now it's 600. That seems like it was an area of resistance. Now it's the area of support. And hopefully we see it kind of bounce up and do a roll. It's all waves. Stocks are waves. They don't go all the way up. They kind of go and they recede. But as long as you can kind of see those little trends there and see where it's holding support, I think is a good area to kind of come in. I'm not saying to do it. I'm just saying, hey, for me, I saw 600 holding support after I played actually Tesla like 2 or 3 times last week. I think it was 3 times at the end of it. And when I saw it hold that area of 600 support, I was like, okay, cool. I feel good about it. Once it breaks it, your risk tolerance is going to be different than mine. Whatever you want to do with it. I chose to average down when it broke under 600, and it ended up working for me, but I understand that doesn't work for everyone. So hey, I like to buy the rips, sell the dips, but Tesla does have that catalyst. When you say catalyst, what do I mean by that? A catalyst is like a thing that's going to do something, right? A thing like a news event or an earnings or something that's going to come along and affect the price in a way that, it doesn't. The catalyst coming up is that December 21st S&P inclusion, where all these motherfuckers have to start buying it. And hopefully we see that price go up. But with that, there's good and bad. So that's a good catalyst. But also there's been a lot of recent downgrades. JP Morgan gave it a price target from 80 to 90, not $1,000, $80 to $90. We're trading at fucking $600 and they're saying $90. So I'm just saying, hey, there's good and there's bad. There's been a lot of bad kind of like price targets coming from analysts because, hey, we are flying high here. $600. $600 for Tesla is crazy. We are way past the area of reason with this one. It's a pure story, pure hype, speculative play to me. I'm going to continue to play the rips and the dips at least until the week after December 21st, because I think it still has a lot of juice there because of that huge cow. This is a once in a lifetime thing to see a company the size of Tesla going to an index. That's a big thing here, and I'm going to play the fuck out of it. But I think after that, I'm going to be all tested out for a while. But anyways, like I said, hey, 600 to me is having a real nice area of support here. When I look at the week chart, though, it's a little bit scary. And why I say scary is if you break it down with the week chart, this is generally I think it's called overhead, cloudy overhead. Basically, it's like an area of, buyers tried to come in and raise it up. Sellers came in, and basically you have this kind of like hammers. This is a great pattern when it's on the bottom, but when it's on the top, it's actually not that good. And then that was last week. And then this 2 weeks ago, and this past week, it was almost like a spinning top or a doji. What do I mean by that? This little candle body is small compared to the wicks, where we say candle, this is the body of the candle and these are the wicks. It's a spinning top. So it's an area of indecision. No one knows what the fuck is going to happen. So I've never really seen these two together at the week level. So that's interesting to me. But what I do like about it, like we said, hey, 600, as we see here, was resistance. Now it's using it as support. What I also like is we see all this volume. We see volume isn't there yet, but the volume is increasing. So this volume, look for volume. Follow the big money. Over the past few weeks, we've seen increasing bullish volume. We haven't seen this in 1, 2, 3, 4, 5, 6, 7, about 2.5 months. We haven't seen this level of volume, and it's slowly getting bigger and bigger, which is why I love it at the week level. Even though I don't like going too far off of this this first blue line because it shows that it's the price is extended really far. But I think that, taking into consideration, in my opinion, it's looking bullish enough for me to be interested in it to play it. I mean, I'm kind of still in it. But anyways, it's making it bullish for me enough to look at it because you see this, which is a question mark to me, but an interesting question mark. You see volume coming in. You see, as we talked about RSI, it's over that 70. As we talked about RSI, you think about it. It's from 0 to 100 or whatever the case may be, 0 to 1, I guess. No, 0 to 100. Anything 30 or below is oversold. So people are selling it heavy. There could be a correction. Anything 70 or above, and this is over that 70 line, it's 76 or whatever, is overbought. You would expect a correction, but it's all relative. These numbers are general, but you have to look at what's relative to the stock. So for Tesla, it can go 85, 86 and still be making gains. It's about 10 off, it's still, about 10 off of there. So hey, you still have room to run without kind of feeling like a correction is imminent, right? What I also like about this at the week level is this MACD, so the moving average convergence divergence. It converted from being bearish to bullish, and that trend looks like it wants to continue here, right here at the bottom here. So I like it. I really like, because I love Tesla, but also there's a catalyst. The charts don't look too bad. They look very, very interesting in terms of volatility. At the day level, I will say that although, like we saw earlier, hey, the 600 line is support, and it's holding this. Hopefully, it holds over this blue line, which has been wanting to do. It does look like at the day level, there's a little bit of sell-off-ness going on with it because the RSI is going down. As I refer to, the other one was going up. This one's going down. This looks like it wants to. The other one was diverging from being to be bearish. This one is converting to be bearish. So that's a little bit concerning there, but still, hey, these are all things you want to watch, maybe not necessarily play. I like that this 600 has been holding, and it doesn't want to fall below it. And when it did fall below it, it was only below it for, a little while, right? It was only under for, like half a day before it kind of found its natural way back up. But anyways, Tesla, S&P inclusion, I'm loving that shit. The other one, because I got to make this quick, the other one, oh man, have a great voice, Nat. The other one I'm going to recycle is CRM from last week, Salesforce, however you want to think about it. And the reason why I like Salesforce last week was it is a carryover, but I'm still loving the charts, even though they're down about 3% for last week, but they're not down to where I was like, they're down to the level that I was comfortable keeping it at, and it hasn't broken yet. And if it does break that level, which I'll show you what it is, I might look at it again. But for me, this makes it even better. I would definitely keep an eye. And so anyways, talk about why I like Salesforce. They had a $27 billion cash and stock acquisition announced a couple weeks ago for Slack. The market didn't seem to like it. They signaling that the market thinks markets are a collection of people and investment. When I say markets, they think, there's not some autonomous thing, it's people. It seems like they think that they pay too much, which I can get that, but they needed to acquire something like a Slack to keep that enterprise level or to keep expanding the enterprise level to go after Microsoft, right? And that's kind of how I see that. But anyways, I love Slack. I love Salesforce. They both had great quarters, specifically CRM. They released on 12/1 their quarterly report, and the revenues were up 20% year over year, and EPS was up 132% growth year over year, and they raised the 2021 guidance. So all those things were fucking great. Still sold off about 9-10%. Also, I love Mark Benioff and Stuart Butterfield. Mark is the founder CEO of CRM Salesforce, and Stuart Butterfield is the beast behind, he was behind Flickr, but he's like the CEO, co-founder of Slack. Them two together, I think we're going to see some really, really interesting things coming up for them. But anyways, like I was saying, hey, the market didn't like that. It was selling off. But what I love about it is even though looking at the week chart, so the week chart does look like it's very bad as opposed to Tesla, which looked good to me. The week chart looks bad, but I'm gonna tell you what I like about it. The first thing that I like that it's holding this $220 support level. That's important to me. It slammed into it and kind of almost wanted to bounce off of it, which to me, as we talked about support and resistance, this is a great area so far of support. Now, if it breaks under that, you want to be on the lookout because the next level is going to be like 208. If it broke that, honestly, I would sell it. I sell everything that starts to go negative against me. You want to nip those losses in the bud. If it's a 5% loser from what I paid, I was my mistake. I got in wrong. That happens all the fuck. That happened to me twice last week. It happened to me with Tesla once. I bought Tesla. I was only down 3%. I was like, fuck it. I got to cut it. Came back, made those losses at the better price. When the market moves against you, you got to cut your losses. You can't take 10, 20, 30, 50% losses. You have to really be quick about it to minimize your losses. But anyways, so I like that. I don't like that it's generally in a downtrend, but I do like that it's holding this support line over the past 2 weeks after the sell-off. It tried to sell off harder than that, and it didn't. So I think that's important. The other thing I like about it, even though you see this trading volume, look at price. If you're starting, look at price, look at the volume, right? And that's the two stories of here. You see this volume, 136 million shares sold in 2 weeks ago to sell off, as opposed to last week, a lot smaller, about 56, 58 million. Still above average, but still, I like that it's decreasing. If I saw this increasing, like higher than this one, I'd be like, oh, fuck, oh, shit, let me think about that one. But it's decreasing. So we'll see about what happens this week. But anyways, I also don't like the RSI is like selling off a little bit. As you see, hey, it's going closer to this 30 line. So as people sell, the RSI starts going more to oversold, right? Close to this 30 line. And usually there's a reversal somewhere around here. When it starts buying, it goes slowly up to be overbought. Another reversal area, right? We're learning a little shit here. And then the MACD is also like diverting. It's still diverting to be bearish. So on the week level, like it's very mixed, but at the same time, I like that it's holding that line there. And if you look at it, why I looked at, I don't like it at the week level. I like looking at it. I like this one at the day level. What I say day level, as we saw this huge sell-off come in that started, 11:25 before earnings. And then it just slammed into this line of 220, 219, whatever it is, 220.4 to 1. And it has been holding that for 1, 2, 3, 4, 5, 6, 7. And about 2 weeks, it's been holding that line. It wants to get off of it. It can't yet. But I love that it's holding that. Like I said, if it breaks that, you're kind of, you play how you want to play it. I would sell it, or I would say, hey, is it going to bounce off of this 214? This is a 200 moving average line. So basically looking over what's the moving average over 200 days. I like to look at a few things. I like to look at the 10, the 25, the 50, and the 200, right? To kind of see which line or which moving average the price respects. You don't have to worry about that. Basically, I like it because it's keeping that line at 220 of support, but also if it broke below that, I'd think about it two ways. I think about fuck that, I'm selling, or two, does it bounce off of this 214 line? That's like a 3% loss if you take it at this price. I'm going to get it as close to this line as possible. Don't buy in the middle, buy at the bottom, buy at the top. Right now, it seems like it's at the bottom. And at the day level, you see how this RSI is at 30, right? Oversold here, and it's trying to slowly bring itself off of that oversold line over the past few days, which at the week level, it hides what it's doing at the day level. So you have to look at week, day, and then maybe some like 30-minute, 5-minute charts, whatever. But anyways, I like that it's holding that line and trying to slowly bring itself back up. Selling volume is down also, which I do love because you see this huge selling volume at the day level over average. It's been moving a lot. But also what I love about this is this MACD, the moving average convergence diverges, it starts to want to round out to start going back up to be to bullish, to converting to be bullish, to being bullish. So I like Tesla for the S&P inclusion. I like Salesforce more this week than I did last week, actually, because it is selling off generally, but it's still holding that really good support line at 220. I want to ride that motherfucker. I want to ride that thing all the way back to highs. I don't know if it'll get there anytime soon because people really hated that fucking Slack purchase. The new one that I'm going to go with, it's not new if you know me, because these bitches want Nike. That's a Frank Ocean in me. Sorry, I had to break out some Forrest Gump for that one. But anyways, I love fucking Nike. I'm wearing an Adidas hat right now, I guess, but I do love me some Nike. I love it, and I love it for a few reasons. Anyways, let me go over why I like Nike. Let me just fanboy on Nike for a little bit. They have earnings on 12/18, which is Friday after market close. I don't like Friday earnings because you have to wait the whole weekend to see how the market's going to react. A lot of shit can happen. So I actually don't like that. That's a negative for me about the Friday earnings report. So earnings is going to come out on Friday after market close. Generally, Nike for the week is up 1%, which is okay. If you see a huge run up before the earnings, that can be good or bad. I don't like I played Nike earnings where I fucking spent up in the same week 10%. It shot up and I got at the top. And then, of course, it dragged out. I had to average down. Eventually, I got out with a good eventually I got out after a while with a good earning or a good profit from it, but it took a long fucking time. So don't buy the run up as much. I mean, play how you want to play it. I don't like to do that anymore, but I do like to see a nice, small, gradual kind of build up the week before, which is what we're kind of seeing after a sell off. But it was a really, as we saw, everything was basically down last week. And so, them being up 1% when the markets were down generally, 1% last week, I think is pretty good showing that it's pretty strong. If it was a green market, I would expect you to be up a 2 or 3, 4%. Anyways, going into the earnings expected. So the price right now is about 137. So we're about 6% away from what the average, 6 or 7% away from what the average analyst price target is on Yahoo. That is $146. So we're still a good ways away from there. There's some money on the table right there. But also what I love about Nike, other than the stuff I'll go into anyways, let me go to the week chart anyways for Nike. The other stuff that I like with Nike specifically is that they have a 5% estimated EPS growth same quarter year over year. So if I'm looking at the prior year same time, the earnings per share is expected to be 5% above that. You always want to look for positive earnings per share. If you look at Robinhood, EPS is going to be right there. What is EPS? You want to look for the bigger, better numbers. Anything with like a parentheses around it is negative. So you want to look for smaller numbers there. But if it's a positive number, you want the best positive number, and that's what I'm talking about. Earnings per share. Look it up on Robinhood. Also, over the last 12 quarters, they've beat the estimates for the quarter for earnings per share 83% of the time. So they beat stuff at 8. That's a B, right? That's a solid fucking B. If I had that in undergrad, Bs, they get degrees. Ds also get degrees. Do they? Cs get degrees. Anyways, that's a good fucking score. And over the last 6 quarters of earnings, they've actually raised the day after. So the price is raised after the earnings 66% of the time. Is that a D? That's a D. So both of those get degrees, right? Yeah, I think so. So anyways, so I like that they beat earnings 83% of the time. I like that they raise 66% of the time over the last 6 quarters after earnings. I like that there's still some money on the table. So the analysts on Yahoo say. Overall, I think the charts are looking pretty okay. Anyway, before I go into the charts, I like that they're shifting before COVID, but COVID expanded or drove their shift to be omni digital markets. What do I mean by omni? Omni means multiple. So they shifted from being selling at Amazon or selling at Academy, selling at Dick's, selling at Nike, Foot Locker or whatever, to being more digital omni-channel. If you look at their suite of online products, like all their apps and stuff, they connect so seamlessly together in terms of helping you reach your fitness goal. But also they have your data, they have big brother shit. They have like your emails, they're on your phones, they send you reminders, and they just become part of your everyday life cycle. Versus before, you had to think about going and buying shoes, you had to think about going out to a mall and buying clothes. Now you can buy them from your phone, and they're making it so much easier. But they still have that physical distribution network, but still they're moving to be more online, and that helps their margins. But anyways, I like that trend for them is going to continue. So I like Nike as an opening play. As when I say opening play, when stuff opens back up, they're a play for there. But they're also a COVID working from home, the way the life we live in now. I love Nike, and I think that they are the best so far for brands to be kind of a hybrid. Their growth, but they're also consumer, and they're also they're also tech. They're a combination of different things, and I think that that's going to be the secret sauce of companies going forward, where they're not just this, they're not just that. They kind of encompass a bunch of things. But anyways, there's also a bunch of recent price target increase that came in ahead of the earnings. But take price target. When you see a price target increase, it doesn't mean it's going to that price right now. The analyst time horizon could be tomorrow, it could be a year. They're saying, hey, we see some positivity, but also people have their own agenda with raising or lowering price targets, as we see with fucking Tesla. One analyst said Tesla is from a buy to a neutral, but then raised the price like 40%. So it's like, bro, what the fuck? But anyways, we'll wrap this motherfucker up because this coffee is about to kick in and I'm about to start talking even faster if that's possible. I like that if you look at Nike at the chart level, sorry, all these lines and stuff, but it's channeling. What do I mean by channeling? There's a clear channel. It's making higher highs and higher lows. Is a very bullish signal. What do I mean by that? This is a high. This is the next high. It's higher than this. Higher highs. What do I mean by higher lows? This is a low. This is a low. This is a low. They're going higher, very bullish, and that's making the channel. You see, channel. It's not rocket science. You just connect these lines together. Boom, boom, boom. There's a channel so you can feel comfortable getting an idea of how you do it. You're not going to get good at it by not doing it. If you want some help, go to finviz.com, FINVIZ, and you just look to see what they do and try to see the patterns and stuff if you want to start getting into it. But anyways, I like that it's channeling. I like the week chart on this as well. What do I mean by the week chart? I like that it's doing a couple things. The only bad thing is there's no average yet. There's no average volume. As you saw on the other ones with CRM and Tesla, those fucking volumes were over this yellow line. These aren't there yet. And also, like, this one is lower than that one. You have to eyeball it. So, grain of salt, but before earnings, people sometimes don't buy. You don't see that. You don't see the people putting their money with it until kind of like they know it's going to happen. I'm playing a little bit before, but also I play after. So I play both. But also I like that the the RSI over at the week level is stable to increasing. It's increasing slower now. As volume kind of dries up, these don't move as fast. But still, what I like is that the week level MACD, it's kind of holding. So I think that's like holding to see what's going to happen with earnings. But it doesn't look bad to me. It just looks like it's holding that line at the week level. At the day level, also, what you see is you do see a little bit more bearish on the day level. It's making all-time highs. But hey, it's wave theory, right? Things are going to go up and they're going to go down. But what I do like about this is when it did sell off, it's still holding this line of 136, about 137. We do see that there's 3 basic constant days of selling after it hit all-time highs before. That's to be expected, I think, going into earnings. This thing is still running. And even for the year, I don't even know what it's up, but it's up significantly for the year. Volume isn't there. So people at least aren't selling with volume. They're buying in volume, but they're not selling in volume, which I think is the key thing here at the day level. People are selling, but I think the overall sentiment is more bullish than bearish because that volume is the thing that's over average, right? Also, like with the RSI, it's going down, but not significant. You don't see it dramatic. You see it kind of gradual. It's kind of cooling off, right? Which is okay. MACD is also kind of cooling off as well. So yeah, like I said, 136. You see really nice support here for 136. IMO, in my opinion, but it's still trading at all-time high. So be careful because hey, with any sharp downtrend, downward movements, you're going to be out of money. I say take 5%, 10%. Take losses or don't take losses. Don't hold on to them. But with Nike, I've held on to some losses a few times, and for me, it always works out. But because like for me, I'm not going to hold the bag. I'm not going to lose with a company that I don't like. So if it's a company I didn't know and I was down 5%, that's different. If I have to be invested, if I have to go from trading to investing in Nike, I'm fine with that. I've done it before. I believe in the company. I love the culture. I love everything about it. I'm a Nike fanboy, like I said. Even let me just put this Adidas hat backwards. So I'm okay with holding this for a while. I think if I took a 10% loss with 5% loss or more with this one, I'd be okay. I might even average down because it's a great company in a great industry, making great movements, making positive, cultural movements, so I believe in it. So I would hold it. I'm very bullish on Nike. I've been the whole time. But anyways, like I said, hey, we're going to wrap this up because this coffee is hitting me. Tesla, like I said, December 21st, S&P inclusion. We're going to see, I think, a lot of movement. I don't know. I'm going to say it's going to move a lot. I don't know which way it's going to go. I'm thinking up, but it could very well be down based on, it's trading high as fuck, and it's all on speculation and story and hype, honestly. Salesforce, even though I fucking love Tesla. Elon Musk is... I read his book, Elon Musk. God damn, well, not his book, but the book about him. Wow, this guy, the shit that he does. Salesforce CRM, like I said, hey, I talked about it last week. I've talked about Salesforce a few times, but I'm very bullish on them overall, especially this week versus last week, even though they're down more. If they're holding that really good support line there, which I love, that 220 support line. Also, Nike overall, because they have earnings that are probably going to fucking be awesome. But even with awesome earnings, you'll still usually see a degradation in price. But for me, I like Nike. How I play earnings, if y'all don't know, if y'all didn't see my past videos, I play earnings. I buy the before run up. So 2 weeks before, I'll buy that run up. Usually it's a game time decision if I'm going to sell it or not the day of the earnings. And then after earnings, if it goes up, hey, great. If there's great earnings and they sell off, which always fucking happens, I'm going to wait to get the bottom price, reversal earnings dip, for the upside. Let's go. Anyways, that's the other one. Follow real_bullish wherever you get your social media poison. Give us a sub here. I appreciate it. Stay bullish, fam. Good luck to all. And remember to wash your hands, wear a mask, and social distance. I will see y'all all next time. Peace.